Hi there, I have to tell you something very important. Whether you are planning to invest in this stock for the long term or you want to short it, that's your choice, it's up to you. But before investing in NKLA, you have to know this. So let me show you. You can see that year to date the stock price did nothing. A bad performance, a decline of 14%. And the market cap is around 800 million. Of course, at the current level, if they have good tailwinds and more sales, then the stock price may rebound. It may go to $8 or even more. That can also happen only if they can succeed to sell more trucks. But what I want to tell you is this. When you look at their fundamentals, you can see that the total cash is around 466 million. That's not bad. Compared to the market cap, it's half of it. So NKLA is getting cheaper and cheaper if you are planning to invest in this company based on their cash on hand. But don't forget that they also have some debt, which is around 271 million. So their net cash position is about 200 million, or if you want to be more precise, around 195 million. Now, as you know that they have some cash on hand, half of their market cap, which is a good sign, you also need to know more about the revenue. If you look for the last 9 months, you can see that the total revenue was about 24 million. And their most important segment is truck sales, because they make most of their money from selling trucks. And as you can see, for the last 9 months, they made about 19 million. And if you add their services of about 4.6 million, their total revenue was 24 million. Now, why is this important? As you can see, they are making some money. But the most important thing you have to be aware of is also their costs. As you can see, the cost of revenue for truck sales for the last 9 months was about 195 million. So you compare 19 million in revenue with their cost of 195 million, something is wrong here. If you want to see a great business, then those numbers have to be the opposite. 200 million revenue and their cost to be about 20 million. But that's not the case. However, you know this, that to make 20 million in revenue, they have to spend almost 200 million. So 10x. The cost of revenue is 10x of their real sales. And that's bad. Do you know why? Let me tell you more. This is just the cost of revenue, 200 million. You also have to be aware of their operating expenses, which are over 300 million. So when you see these numbers, you might say, oh my gosh, but maybe NKLA will make more money in the future. They'll be able to sell more trucks and the revenue will go up. But as you can see in the last quarter, a decline in revenue from 23 million to a loss of 2 million. And for the last 9 months, a decline of more than 50% from 41 million to 19.6 million. So this is a bad sign for NKLA. Now, if you look at their total losses, their net loss was around 800 million. So they made 24 million revenue, but their total loss was over 800 million. And that's a big red flag. Besides this, you also have to be aware of their debt. As I said, they have over 217 million. And if you look at their interest, how much they have to pay for that debt, you can see that for the last 9 months, they had to pay 71.2 million in interest, only for that debt. But the problem is, they made only 24 million in revenue, their total revenue. So their interest is higher than the revenue. almost 3 times. So this is another big red flag. Besides the huge costs they have, the cost of revenue and the operating expenses, you also add their interest expense, which is much higher than their revenue. Same for the last 9 months, 2023, and also for the last quarter. Their interest was 52 million and the revenue was 1.7 million. And this is bad, quite bad. Do you know why? Well, when you spend more than you make, at the end you'll go bankrupt. However, NKLA has some tailwinds from this green revolution, the new green economy. But you also have to be aware that somebody has to pay for their innovation, for the research, for their costs, and cover those huge losses. And guess what? Who will pay for their huge losses? Well, if you look at the number of shares for the last 9 months, compare it to 2022 and 2023, you can see the number of shares has increased, almost doubled, from 400 million to over 700 million. And for the last quarter, as you can see, the number of shares has increased to 857 million. So investors are paying for those huge losses. You can also see their past results for the number of shares outstanding, which has increased from 400 million to over 800 million in just 1 year, 2 years. So this is quite bad for investors, of course. For the management, that's quite great. They get their wages, their bonuses, and the business keeps going. But the investors are losing a lot in value. And that's why the stock price is down over 14% today, and for the last 5 years, a decline over 92%. Now, this doesn't mean that NKLA can rebound. The stock price may double from the current level, as it happened in 2023, when the stock price was about 62 cents and then it went up to $3. So an increase of over 300% in just a few months, from May to August. That's quite nice. But then you can see what happened. Another decline of 79%. That happened because the management took advantage of this high price. They issued more shares, as you can see here. And by issuing more shares, they raise more money from investors to fund their business or their bonuses. Now, this may happen again. Anything can happen in the stock market. You can see a lot of ups and downs. But the most important thing is to know when to invest and in what companies. Because if you take this huge risk of high dilution, huge debt with high interest expense and declining revenue, as you can see, revenue is declining and no earnings, on the contrary, their losses keep going up, your risk is quite high to invest in this company. That's why you have to be very careful if you decide to invest in NKLA. There is no doubt, if you are a speculator, you may make some money if you know when to buy and when to sell. But don't forget that NKLA is not alone. There are other companies that want to take advantage of this green revolution. Maybe you heard that Biden administration unveils hydrogen tax credit plan, which will deliver over around 140 billion revenue for different hydrogen companies that are working in that industry. But we don't want to rely only on this plan. You have to rely on the company, on their fundamentals, their future revenue, how much they are spending, and if they can become profitable. And of course, if they don't take advantage of investors by issuing a lot of shares. However, if you do decide to invest in NKLA, you do a great thing for the environment. you invest in a green company. You help them to survive, and maybe they'll discover new things which can push the stock price higher. This can also happen. That's why we have the stock market, to decide. We have different opinions. Some people might say that NKLA will go up to $65. Others might say that anything can happen. But you have to know the risk. As I said, this company is doing quite bad at the moment. And you also have to know the reward. Because as you know, there are some tailwinds from this industry. But first, don't forget the fundamentals. You only look at their revenue. And you can see, this is a good indicator, their total revenue. You can see that they are not doing great. The revenue was with minus in the last quarter. And for the last 9 months, it has declined by almost 50%. And this is quite bad. So to wrap up, it's up to you, whether you want to take that huge risk or to avoid this company. And if you have other questions, please let me know in the comments.